The IRS just got an upgrade. And if you have a Venmo account, a Cash App, a PayPal, or any crypto, you need to hear this because the IRS is now using AI technology to track financial transactions with a level of accuracy that most people don't even know is possible. And if you've been assuming that small payments or crypto trades fly under the radar, I need you to stop assuming that right now. I'm Paulette Foster with PRF Tax Service, and today I'm breaking down exactly what the IRS can see, what triggers their attention, and most importantly, what you can do right now to protect yourself. Let's get into it. Let's start with what's actually happening. The IRS has been quietly building out an artificial intelligence system designed to cross reference financial data from multiple sources at the same time. We're talking about bank records, payment apps, crypto exchanges, and third party reporting, all being analyzed simultaneously to flag inconsistencies between what you report on your tax return and what's actually moving through your accounts. This is not speculation. The IRS has publicly stated that it is investing heavily in technology and data analytics as part of its enforcement strategy. They received billions in additional funding specifically for this purpose. And here's what that means for you as a freelancer, a gig worker, or a small business owner. The days of cash payments and app transfers going unnoticed are over. Now, let's talk about Venmo, Cash App, and PayPal specifically, because this is where a lot of people are getting caught off guard. As of 2022, the IRS changed the reporting threshold for third party payment platforms. If you receive more than $600 in business payments through these apps in a year, the platform is required to send you and the IRS a 1099K form. $600. That is not a lot of money. That is one client payment. That is a few gig economy jobs. And yet, a lot of people are still not reporting this income because they either don't know the rule changed or they assume the app isn't reporting it. The app is reporting it, and the IRSAI is cross referencing it against your return. If you received a 1099K and did not report that income, that is a red flag. And red flags are exactly what this AI system is designed to find. Now, let's talk about crypto because this one is even more misunderstood. A lot of people think crypto is anonymous. It is not. Every transaction on a blockchain is recorded permanently and publicly, and the IRS has been working with blockchain analytics companies to trace crypto transactions back to individual taxpayers. Here's what the IRS considers a taxable crypto event: selling crypto for cash, trading one crypto for another, using crypto to buy goods or services, and receiving crypto as payment for work. Every single one of those is a taxable event. And if you did any of those things and did not report them, the IRSAI is looking for exactly that discrepancy. Starting in 2024, crypto exchanges are also required to report your transactions directly to the IRS on a 1099-DA form. So even if you thought you were flying under the radar, that window is closing fast. Now, here's the part I really want you to hear because this is not about scaring you, this is about protecting you. The IRSAI is not just looking for people who are hiding money on purpose. It is flagging anyone whose reported income does not match what the data shows. That means innocent mistakes, forgetting a 1099, miscategorizing a transaction, not knowing the rules changed, can look exactly the same as intentional fraud to an automated system. And once you are flagged, you are on the IRS's radar. So here is what you need to do right now. Number one, report all income. Every payment through Venmo, Cash App, PayPal, Zelle, every crypto transaction, every 1099 you receive. If money came in, it needs to be on your return. Number two, keep records of everything. If you have legitimate business expenses that offset your income, you need receipts, invoices, and documentation. The AI can flag your income, but it cannot see your documented deductions unless you claim them properly. Number three, separate your personal and business transactions. If you are running a business through a personal Venmo account, you are making it very hard to distinguish between taxable business income and personal transfers. Get a business account, keep it clean. Number four, if you have unreported income from prior years, talk to a tax professional before the IRS finds it. Voluntary disclosure is always better than being caught. The penalties for coming forward are significantly less than the penalties for being flagged and audited. Number five, understand what the IRS can't see. They can see what's reported to them by third parties. They can analyze patterns in your financial data, but they cannot see inside accounts that aren't reported. They cannot access your accounts without legal process, and they are not infallible. A well documented, properly filed return is your best protection. Knowledge is power here. The more you understand about how this system works, the better positioned you are to make sure your taxes are clean, accurate, and audit proof. If you're watching this and thinking, okay, Paulette, I need to make sure I'm not missing anything, I've got you. I put together a free tax savings checklist that covers the most commonly missed deductions for freelancers, gig workers, and small business owners. Because the best defense against an IRS flag is a return that is complete, accurate, and takes every deduction you are legally entitled to. It's free, it takes 30 seconds to grab, and the link is in the description. I'm Paulette Foster with PRF Tax Service. New videos every Tuesday and Thursday. Subscribe so you don't miss the next one, and I'll see you then.